Before we go into the future, let's go into the past a bit and your journey into tech, your understanding, because we all start thinking we know things and you've seen a lot develop. You saw the internet come, because I want to frame what I think is happening now, which is I think is multiple exponential technologies all interlinking at the same time, creating something incredible. But you've seen a lot of this getting to this place in time. So talk us a little bit about, what you saw, what you were thinking was going to happen and how it's changing.
Well, the way we think about it is about every 10 years, there's a new wave. And I think that's probably standard approach for most tech investors. The internet at the time, what we were thinking was just a cool way to buy and sell things. But there was that glimmer of hope that it could become something much bigger. And that was really stomped out in 2000, 2001 and had a profound impact, I think, on how a lot of people felt about tech. It was a point where it really created some caution. As an analyst, there was a period where it was the right thing to do to put these massive price targets on these companies. And those massive price targets blew up and really became kind of a sign of shame for sell-side analysts. And it, I think, really changed the view about how many investment professionals thought about the future and these waves that come about every decade. And I remember in 2004, we had started covering Apple. We picked it up with a neutral rating. We had buy, neutral, and sell. We picked up with a neutral rating because they'd just come out with iTunes and it was an exciting product, but I didn't feel like it justified the move in the stock. We were neutral on it for like 3 or 4 months. And then we went to upgrade and we came out with a big price target. It was like 3 times higher than where the stock was. And that was the first big price target move that a sell-side analyst had done since some of that shame that happened. And what I was doing is I was just trying to look into the future. Like, don't worry about what had happened over the past 3 years with investors and how they viewed people in my profession. Just focus on where the world is going. And I remember going into our morning meeting that day to make the call, and our head salesperson pulled me aside and he said, you're going to embarrass me today by going out with this big price target. Usually you just go a few dollars ahead of where the stock is at. And he said, you better be right, because if you're not, you better be looking for a job. And needless to say, that story stuck with me and was more of a call to arms to always focus on kind of the waves that are going. Don't be burdened by what other people think. And you probably hear that a lot from people, just be clear thinking. And so to answer your question, is what I try to do and think about these waves is really hunker down into what do I think is going to be the most common behaviors 5-10 years from now? And then which companies are really going to be powering that change? And just to finish the thought is that each of those waves has had a different identity. And for me, it's been a different muscle. There was the Apple wave in my world. Then there was the Amazon wave, and then the Tesla wave. And now we're getting into the Web 3.0 and the metaverse and the AI wave. And so each one is distinct, but has a lot of similarities around anchoring in where is the world going and common behaviors that I envision 5-10 years down the road.
At this moment in time, we've got one of those inflection points where nobody wants to trust those price targets again. Inflation has become the big fear, recession fears, and people have massively started to discount some of these names. How do you deal with that? Because you're having to live with the future. You've got a clear path of where you think it's going. Sure, you're not going to be right on everything, but generally directionally, that's what you're aiming to do. But here you are in a world that nobody wants to hear what you say. Well, that's not true, but you know what I mean? That the market doesn't want to hear what you say because it just goes down every day right now. How do you deal with that at this moment in time? The kind of recession, inflation, and the macro?
You have to take into effect the macro. And it's not my violent concerto, but I have to take it into effect. And I would just maybe draw a line between unapologetically just supporting these tech growth companies, no matter how much they're down. That has not been our approach over the last 6 months at Loop. We've been pretty heavy in cash. We were 70% in cash coming into the beginning of this year. Now we're 50% in cash. And so we have we've put money to work, and that money has not.
Hold on. What made you go 70% cash? Because that's a hell of a ballsy call.
It just it felt like things weren't lining up. There was aspects that we saw and somehow these stocks were moving that reminded me of what happened around 2000, 2001, and it felt like we were in a bubble. And I would just describe it as that companies were just not going up. The valuations weren't going up in lockstep to what was changing the fundamentals. And we have a process called reverse DCF, where we basically calculate what is implied in the growth rate for these companies. And what we are finding is that many of these tech companies were trading at valuations that would imply 40, 50% growth for the next decade. And the probability of that actually happening, usually there's like 10 companies in tech out of the 3,000 tech companies, 10 of them that actually achieve that. But in this case, we had 100 plus type of those companies that were out there. And so that's what got us there, was this kind of I would describe it as a view of the future, but a discipline around valuation. And it was, by the way, it did not go well at first.
No, this is one of these career moves. If you're not careful and you get that wrong, you're going to get fired. And if you get it right, you're a hero. Well, until they forget, which they always do.
Keep in mind, we were wrong. We launched this fund in July, and we felt like the market was going to come down, but we were wrong. We missed July till November, and I think there was just a understandable concern from our LPs about what are you doing, and we still didn't put money to work, and so it's. By the way, I'm not happy about what's happened with the market. We've lost our LPs' money. It could have been a lot worse. It could have been a lot worse. I would just say that. And I feel like numerically we're doing great, but it doesn't change the fact that we are down year to date. And I wish that that wasn't the case. So I'm glad we've had that position. And then now the question we ask ourselves is, I want to make sure we're sticking to our topic here. The topic is just around what do you do when you believe in these futures, but then you also have the market telling you something different. And I think the answer is that you have to listen to the market. And the way I would describe it is you need to understand the sense of humor of the market and get the joke. And when the market is moving up, outside of any sort of valuation parameters, any sort of substance behind it, you need to get the joke there. And so we do balance it out. It feels like every long investor that just has been doing this for a long time is just on buy the dip. But unfortunately, I think we're entering a period where, even though it feels like we've had the dip, I don't necessarily believe that we're fully through that dip. And so I think that you just still need to be listening to the market. The market's telling us something right now.
Are you starting to put some of the cash to work now? Are you finding opportunities, or are you still cautious because you don't know where this is, where the bottom lies?
We describe it as this kind of like a bell-shaped kind of curve, or the bottom of a curve. And we're going to be slowly deploying through, judiciously deploying through the bottom, but it's not based on any sort of view in the market. We've talked a lot about the market. We have a view, but our deployment schedule is not based on a view of the market. It's based on valuation discipline. And we need to just be clear about what we think that the underlying growth rates of these companies are and what we would describe as fair value. And so to answer your question is that we have a list of about 30 companies that we would love to own. And we're a relatively concentrated fund, but we're not going to get all 30 of them into the fund. But we are waiting. We have targets that hit. We also have some breakers in the overall market. When it triggers, we had one trigger. As I mentioned, we've gone from 70 down to 50. There's been some triggers on the breakers that basically we have some forced buying. So that's how we're going to be deploying it. We're not viewing these kind of sharp pullbacks as we just got to get to work today. And the reason why there's that valuation principle around it. Most importantly, that valuation principle. And I think the reason why a lot of these companies still haven't fallen into, even though that some of them are down 75%, Snowflake, for example, down 75%, still is pricing in 25% growth over the next decade, which they may be able to do that, but that's still a high hurdle. And so we're going to be looking and waiting, and the market may be up, and those companies that we want to buy may be down, and we'll buy then, and the opposite may happen true. But we're trying to just really focus on fair value.
It's a really complicated world out there. We've got massive inflation, recession fears, war in Europe, COVID, China issues. What the hell's happening? Everyone's got an opinion, but who's right, who's wrong? As co-founder of Real Vision, I've got my own view, but maybe I'm wrong too. And I want to go and find out more from real experts, real in-depth analysis. And I've hand-chosen my experts for this 2-week journey of discovery in global recession. Is everyone wrong? I've chosen people like Peter Zeihan to talk to him about geopolitics, David Rosenberg about the economy, and Pierre Andran, the world's most famous energy trader, about how to navigate the oil markets and where it's all going. This starts on May the 2nd, and I'm going to learn so much about what really is going on and how to best navigate it. Yes, not everybody's going to be saying the same thing, but it's going to allow me to piece together an investment framework to navigate these complicated times. Now, normally we'd give you a 7-day trial for $1, but because this is so important for all of you, and I think it's one of the most important pieces of content we've ever done, we're extending that free trial for 2 weeks for $1. So you get the entire campaign of all of these great minds. And it's only $1 for all of this. So just go to realvision.com/global recession to find out more and join me as I try and figure out what the hell's going on.